In this presentation, we will enter a sales receipt for a service item as opposed to an inventory item, the sales receipt being the form used to record the receipt of cash at the same point in time that the service was provided within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to once again add a sales receipt, however, this time for a service item. We'll do that by going up top to the plus icon, and then we'll go to the customers. Once again, we're not going to be doing the invoice this time, but a related form, the sales receipt form. The difference being that the invoice means that we're going to bill the client and expect to be receiving payment in the future, as opposed to the sales receipt, meaning we're going to get paid now. So in our example, if, for example, we did work on, say, diagnostic or tuned the guitar, and we're going to get paid by that, we bill someone and expect to be paid in the future. We send the bill for that and expect payment in the mail. Or for a bookkeeper, we do work and say we did a service item work. Here's the bill for what we did and expect payment. That would be an invoice, as opposed to if we're sitting in our store, someone brings their guitar into our store and says, I would like some type of diagnostic, help to tune the guitar, put the strings on the guitar, whatever we have to do. Then, if we do it then and there, get paid then and there, that would be the sales receipt. That's what we're going to take a look at now. We're in the store, we're getting the work done, service item, not inventory, we're not selling goods, and getting paid at the same point in time. So we'll use the sales receipt to record this. It'll be very similar to the invoice, except that we're not going to have the accounts receivable increase. Rather, we're going to get some form of payment. We're going to say that the customer is going to be Sam the Guitar Man. We don't have that here yet, so we're going to add it by just typing it in, Sam the Guitar Man. So we're going to add that and just say tab. Because this is a customer, we probably would want to add more detail, any kind of information that Sam would like to give us. For contact information, we'd like to put you on our mailing list and whatnot. We can do so and have that information here, but we're just going to save the name in order to collect the payment at this time. So we're going to go through this. The billing address would be down here. We're going to say that the sales receipt will be on the date of January 16th. So we'll have January 16th, the date. No shipping information. We're going to say that the form of payment is cash. So we're in the store, we got cash at this point in time, and it will be going to the undeposited funds because it hasn't reached the checking account yet. We're going to go to the bank at the end of the day, hopefully, or sometime soon. We really need to go to the bank. But then we're going to go down to the products and services. We're going to say one was a diagnostic, whatever that means for a guitar. It's going to be a diagnostic. So we'll diagnose the guitar. And that's going to be a service item. We're not selling a guitar. We're not selling any tangible thing. It's going to be a service item that we provide. Quantity 1, rate $68. Quantity may be equivalent to, say, time right now. We might be saying this is an hourly thing or something like that. But then the rate is going to be 68. Notice it's not taxable, so we're not going to check off the taxable. The system knows not to check it off. How? Because when we set up the inventory or service item, we told it it's not a taxable item, and that's going to be our custom on this example problem. We sell inventory, those are taxable, subject to sales or usage tax, and service items will not be. Then we're going to say that we have another item, so there's another item we put together, and that's going to just be our service. So we're just going to say it's our service, and that's going to be the guitar full service, whatever that is. It's not inventory, it's going to be some type of service item we have. One of those, $140. Once again, it's a service, therefore not taxable. We add those two up, we're at the $208. No sales tax because we're not dealing with sales tax for service items. That's how it is in our wherever we are, and which is New York. But this is an example problem, so it's just anywhere that doesn't have taxes on service items. And the total will be $68 then. And the amount paid, we assume, is $68 because we're saying this is a sales receipt and therefore we got paid at this point in time. So if we consider the journal entry related to this sales receipt, it's actually a lot simpler than it would be if it was an inventory item. And note, it'll be a lot simpler if it was an invoice as well. This is a sales receipt, very similar to an invoice, except that instead of accounts receivable, we got paid something. We got paid cash, and therefore we increased the type of payment, which in our case is undeposited funds. Invoice would be increase in accounts receivable, the IOU representing the customer owing us money. The other side of it's just going to go to sales, which is going to be revenue, of some kind of revenue account. Now, if we're doing like a bookkeeper, then QuickBooks often calls it fees earned, or we might just call it income. We might call it revenue, but it's just going to be some type of income account designated for services. And that's it. We don't have the sales tax. We don't have that other issue with the sales tax, and we don't have the inventory going down. We don't have to track the inventory that's going to go down. We don't have to track the related cost of goods sold. Very simple transaction for the sales receipt. So the invoice will be similar if it was for a service item as the sales receipt. If we're not dealing with inventory, then the journal entry related to it will be much simplified. Or in other words, there'll be less accounts affected on the financial statement. We of course still have the options of printing this. We could save it, we can email it. We have the save and close over here, as well as the save and send. I'm going to go ahead and save and close it, and we'll take a look at the effects on the financial statements. Then we're going to go to the reports on the left side, look at our favorite reports, that being the balance sheet. First, let's take a look at the balance sheet. And we're going to change the dates up top to 01/01/19 to 12/31/19. That's January through December 2019, and run that report. Here is that report. We got paid, but we didn't put it into the checking account yet. It's in undeposited funds. We got it in our cash register. It's here in undeposited funds. If we go into that undeposited funds, and we will deposit these, obviously we're doing this kind of in a little bit unusual order so that we can group things together that are like in nature. So we'll deposit these in groups as well. Then we have our sales receipt for Sam the Guitar Man. Here it is. Now the other side is going to be in a split because we had two different items that we had involved. So if we select that, if we select any of this line item, then we're going to see the sales receipt, and that's why these two products, that's why it has a split item there, even though they're going to basically the same income account, which is going to be the service income account. So then we'll close this back out and take a look at the other side. So I'm going to go back to the report summary. We're going to then open the income statement, but let's do that in a new tab. So I'm going to right click on this tab, and we're going to go to duplicate. And then in this tab, I'm going to pull this one to the other side so that this one's named balance sheet, and we'll keep that as the balance sheet. And then we'll go down to the reports. We'll go to our other favorite report, the financial statement of the profit and loss report. We'll take a look at that. Change the dates from 01/01/19 to 12/31/19, January through December, and run that report. Here is that information. Now we have the sales of the product, and then we have the service. So this is going to be where the service items are going to be recorded. So within the service items, we'll select the 208. And then here is our two items. It's broken out. Notice it has the same number. It's the same sales receipt, but it has two line items given the fact that there's two different things that we charge, the diagnostic and the guitar full service. So it's providing us more detail. If we select it, then we could see that the detail is combined together. There's the 68, there's the 140, the total being the 208. So we're going to close this back out, and we'll go back to the report summary. Note there's no cost of goods sold. So if we're in a service company, we don't have inventory, it's going to be simplified because we don't have to track the inventory. That simplifies things a great deal. We might have some other issues we're dealing with. We most likely will with any industry, but we don't have to track the inventory, and that'll simplify things a lot with relation to our normal type of billing process, our normal transactions, our invoices, and our sales receipts. For more accounting information and accounting courses, visit our website at accountinginstruction.info.